The Mortgage Minute today being brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They only tell us the number you need to put in your mortgage calculator to find out what your monthly principal and interest payment will be. If you don't have a mortgage calculator, we'll give it to you for free. rsrlinks.com/mobile app. rsrlinks.com/mobile app. You can tell what you put in the calculator for your principal and interest payment. And we're looking at yesterday's locked rates, again, according to OBMMI. Conventional 30-year fixed, 6.707. That was up. Jumbo 30-year fixed, 6.855. FHA 30-year fixed, 6.408. VA 30-year fixed, 6.192. And the USDA 30-year fixed, 6.438. Every one of them, it was a clean sweep. They were all up yesterday. If you want our market thoughts each and every business day morning, as early as the data allows, rsrlinks.com/market minute, rsrlinks.com/market minute. Let's see what the markets are doing today. Let's see what rates are doing today. Well, the Dow Jones, if you remember in the last segment, I was talking to you, and the Dow was just up a little bit. Something's going on because we've got that massive volatility going still. And we're looking right now, the Dow is up 191 points. And I think I said this before. Yeah, the S&P 500 is up 36. The NASDAQ's up 231 right now. I don't usually give you all of those, but I thought today, it might make sense just because it is so volatile. We are also looking, as we always do, we're looking at 10-year Treasury is up 18 basis points, 4.44. The mortgage-backed security, unfortunately, I've got bad news for you. That one's down 64 basis points. When the bond goes down, the yield goes up. That means interest rates, mortgage rates are up this morning. And the question is why? Well, it's all pretty simple. It all has to do with volatility as the trade war escalates. After the U.S. increased tariffs on China to 104%, that's cumulative. China responded by increasing their tariffs on U.S. goods from 34 to 84%. Additionally, the European Union approved a vote to place tariffs up to 25% on various items. The uncertainty in the market appears to have investors feeling like they want to sit on the sidelines until this is all over. It's rare to see stocks, bonds, and the dollar down all at the same time. Often money goes from stocks into safe haven to the bond market. But this is not happening right now. There are some that believe China, who is the biggest holder of our treasuries, is selling them, which is causing yields to move higher. Possible, not likely in my opinion, because a lot of the treasuries they hold were purchased at much lower rates. So they'd have to incur huge losses. Additionally, where else would they put their money? Other countries like Germany could be an option, but their market is much smaller than ours and would not be enough. In the past, China has purchased our treasuries in order to peg their currency to the dollar. As they invest in treasuries and repatriate their currency into ours, it strengthens the dollar comparatively. If they were selling our treasuries, we would likely see the dollar strengthen, not weaken. The market uncertainty is causing many to believe that a recession is a real probability now. On that note, Lacey Hunt yesterday explaining how he feels U.S. is already in a recession. It just has not been declared by the NBER. He thinks the Fed should already be cutting and needs to help the market because of liquidity issues. Now, Lacey Hunt, brilliant, usually correct. Minneapolis Fed president, usually wrong. Neil Kashkari spoke on CNBC this morning and said that he does not see liquidity issues and that the Fed is still in wait and see mode. He thinks the hurdle to cutting rates has increased due to tariffs and explained that it's too risky to look past the inflation effects of the tariffs. Figures Kashkari just doesn't get it. Stock started the day sharply lower, have since turned positive. Mortgage bonds are lower, but off their worst levels. Now they're back down there again. 10-year yields have moved up. It's crazy. Oil prices moved down, which we already talked about. This will not show up in the pump yet, but it will eventually, other than California, because we like to keep our gas prices high. Around 1 o'clock Eastern time, is that 10 o'clock our time in California, we're going to see a 10-year Treasury auction. It's not going to be very good because people still think there's a lot of volatility in there. I don't think it's going to be a good report. 2 o'clock Eastern time, that's 11 o'clock our time. We're going to get the Fed minutes from March 19th meeting. This is old news from 3 weeks ago, especially with the changes we've seen in our economy over the last few weeks. The decision about the tariff issue is going to override all of that. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.